What's up guys, Sterling the Investor here, and in today's video we're going to talk about a topic that I see as possibly a problem that will be coming upon us here in the near future. And for everybody that's new to the channel, we discuss multiple topics such as investing, entrepreneurship, and lifestyle. And to everybody that's been with us for a while, we appreciate your support. So let's jump right into the topic. So to jump right in, the first thing I wanted to point out is that, we have a discrepancy in the rate at which, home prices are going up and that wages are going up. So right now, nationally on average, home prices are going up by about 5%. On the flip side of that, we only have wages growing at about 3.5%. So there's a 1.5% discrepancy there, which I see could, result into a problem because you've got people that are making less money buying houses that cost more money. And that takes me into my next topic. The lending requirements are loosening again. Not quite as bad as, our financial crisis time. However, right now you can get an FHA loan, which is a government program with a 580 credit score. And no offense to anyone with a 580 credit score or below, but you've displayed some type of, behavior that you haven't been responsible with paying your bills. Not to say you can't correct that, and that's not to say anyone's a bad person, but that's just a fact. You don't get a 580 credit score for good habits or good behavior. And then conventional loan, we can go down to around a 620 right now, and I can speak on that as my corporate careers in the real estate mortgage industry. So we're getting people that are making less money, that are less qualified to buy homes that are costing more money. And to add on to that, here in Georgia and in most counties, the conventional loan limit has increased to about $480,000 roughly, a little bit over that actually. And what that means is that if someone puts 20% down, they can purchase a house that's over $600,000. It's over a $500,000 house for someone that has a 620 credit score. While that's not horrible, it's probably not someone that is probably qualified to buy a $500,000 house. So then with all of this happening, we have a stock market that's looking like it's getting ready to correct itself. We've been in a bull market for, about 8 to 10 years now, just, steady going up and up and up. And now we're starting to see some bearish action. We're starting to see some, bad days in the market. Market down 300 points, 400 points, 600 points. And people are getting afraid. So what that's telling me is that lending requirements are loosening. People aren't making as much money as houses are going up in terms of how much they cost, and the stock market is getting ready to fall because we're due for the correction. Things can't go up forever. So with a combination of all of these factors, it's got me a little worried. But lucky for us, we're smart investors. We save money, we invest our money, and even though the stock market is falling, you want to do something called dollar cost averaging, and I'll make a video on that here in a little bit. But even if the market is falling, you want to continue to invest in the market because it's a statistic out there, and I'll look it up and I'll make an entire video on that as well. But it's something like if you miss the biggest 10 or 15 days in the stock market over a certain amount of time, the difference between your return was like crazy. It was huge. So you need to be in the market, and then when the prices are falling, it gives you an opportunity to get good stocks, invest in good companies at a discounted price. So we're not going to be afraid, but just in terms of the overall economy, people that don't have a financial education, we could be headed to some rough times. And then to add to the loosening lending requirements, we have non-QM loans that are coming into the market. And basically what that is the subprime loans that got us in trouble before. So with these coming into the market, the loosening lending requirements, the increase in home values, and then we've got less qualified people to purchase these homes that are increasing with value. I just don't think it's good for us here in the near future. So the gist of the whole video is just to give you guys a heads up and let you know to buckle your seat belts, get responsible with your money if you're not already, and I'll catch you guys in the next video.